It is 10:11 a.m. Pacific Daylight Time. It is tax day, which would be April the 15th, 2026. Did you give the government their due today? I mean, did you go ahead and just give them what they asked for? Or actually, they didn't really ask for it, did they? They held a gun to your head and said, if you don't give us your money, we're going to, build a canoe out of your cranium. It is tax day, and it is also episode 1300. I've made it. I literally have 100 shows, beginning with this one, ahead of me that start with the number 13. What could possibly go wrong? We're going to start with all birds. And you'll understand why I'm just like beside myself with how stupid people remain. Nobody ever learns their lesson, and they're not going to learn it with all birds either. And if you have no idea what the hell I'm talking about, you will. And then Pocahontas Warren is on the warpath, this time again with Elon Musk and his X money. Pakistan's going to be in the news, as well as, Jameson Lopp. I'm not sure where the disconnect is with Jameson Lopp, but I wholeheartedly and intensely disagree with BIP 361. IMF, they're wetting their diapers again, ladies and gentlemen. Who would have guessed? International Monetary Fund is very terrified of, Bitcoin. They're actually more concerned about a debt trap, which we'll get into. But of course, they have to mention Bitcoin in the same sentence as anything negative because, it's the International Monetary Fund. They're terrified of everything. In the second part of the show, we've got some news on Strategy's STRC. It's not going away. It looks like it might be getting bigger. Who knows? And then companies that are forming around products like Sailor's Stretch, or STRC. How I'm aghast at building a company that literally makes no product, provides no service. It's amazing to me. Then we're going to talk a little bit about Trump-backed WLFI. They're back in the news. And Google's Gemma. Looks like somebody's kind of trying to clone some frontier models and making them run on your machine. That will be the last up for the day. But we gotta do this one, man. All birds. And before I get into this one, we need to preface. I need to sit your ass back in the time machine and let Professor Sherman here take you way back to post 2017, where every shitcoiner under the sun was getting into it. Right after every shitcoiner was spinning up a shitcoin and an ICO and all that, we started seeing companies do weird things to attach their name to Bitcoin. And I had damn near forgot about this little section in time. It was about, 6 months long, 9 months. I'll give it, I'll say, I'll be conservative and say that it was for a year. Companies that had nothing to do with finance or money or Bitcoin mining started attaching their corporate name to Bitcoin, specifically in the way of sort of like mining. It was more about attaching their corporate name to Bitcoin mining than anything else, but they were essentially coattailing on the name Bitcoin at the time. And there's particularly two things that I remember. One was a company called Long Island Iced Tea. They made iced tea. It's sort of like if you live in Texas, you've probably seen an HTO where they, it's like a kiosk that will sell you iced teas rather than coffee. I got a friend that owns one of those franchises and they do very, very well. Um, this particular Long Island iced tea company was failing at the time. Bitcoin was rising, and all of a sudden, they at Long Island iced tea decided that they were going to pivot to Bitcoin, and it saved their stock, at least for a little while. I don't really ever remember what became of Long Island iced tea. It doesn't really matter, because it turns out they had absolutely no intention of doing Bitcoin mining or buying a bunch of Bitcoin and putting it on their balance sheet. It was just, they were just saying this, and it worked because people started buying their stock. And then there was a company that licensed from Kodak. Yes, the filmmakers and the camera makers back in the day before digital cameras. And Kodak was the company that actually made the very first digital camera. And they didn't survive their own creation because they actually never really started stamping out digital cameras. They invented the tech, but they didn't sell it. They licensed it to other people, or other people figured it out. They just never did anything with it, because the sentiment at the top of the food chain was that people will always shoot on film. Well, we see how that goes. So as they were failing, the ability for other companies to license the Kodak name started becoming really cheap. And there was this company, and I don't even remember what the name of it was, and they were saying that they were Bitcoin mining. They were very specific about it. They licensed the Kodak name and slapped the name Kodak on their miners. And somehow or another, not only did this company able to ride the coattails of Bitcoin, but Kodak kind of came along for the ride unintentionally, because their name was all over the news about Kodak was getting into Bitcoin mining, even though they themselves weren't actually doing it. They were just licensing their name. Yet they saw their stock price actually rise. And the whole bunch of other people did it too. It was freaking silly, right? And then it just all kind of dissipated, and we stopped talking about it, and I damn near forgot about it until the company named Allbirds hit my attention today. Allbirds shares soar 600% as it pivots from footwear to artificial intelligence. Yes, I know this isn't about Bitcoin, but it's the same style of bullshit. Your company's failing. You can't sell enough shoes. So what do? You pivot. And Allison Morrow from CNN is going to tell us a little bit about this one, or not, because apparently I'm out of free articles. So took a second right there in that little break to go find a different story about Allbirds. This is actually from Barron's, and they are not blocking me the second that I start scrolling, so we'll give it a shot. A floundering shoe company once loved by Silicon Valley's elite is hitting the magic AI button. Allbirds, a direct-to-consumer shoe brand that ballooned to everyday popularity 10 years ago, announced on Wednesday that it is pivoting to artificial intelligence computing infrastructure with a long-term vision to become a fully integrated GPU as a service and AI native cloud solutions provider. Because nothing says you know how to do that like selling high heel shoes. Right? The shift comes after Allbirds stock tumbled 99% from its November 2021 IPO price of $15 a share. Shares rose more than 600% to nearly $17.51 on Wednesday's trading, marking the stock's best day on record. Shares are still far from their highest levels, and apparently, given this graph, it looks like the highest level, and they said that they've adjusted for a 20-to-1 reverse split on that $15 price. So the IPO price was $300. It got up to damn near $600 a share, and then cratered all the way down to like under $5, and is now chilling out at whatever the price is. $18.24 is what I'm seeing right now on the live chart. So annual revenue has declined in each of the past 3 years, falling from a peak of $297.8 million in 2022 to $152 million In 2025, the shoemaker has never posted an annual profit as a public company. Let me say that again. Allbirds has never posted an annual profit as a public company. Allbirds announced it reached an agreement for a $50 million convertible financial facility with an institutional investor and expects to change its name to New Bird AI. I'm sure a flaming phoenix is probably in their company logo's future. I'm just saying. The conversion of the facility is subject to shareholder approval, which is anticipated to take place May the 18th. The company plans to use the initial capital to acquire high-performance GPU assets, and all I can say to that is good luck. Quote, the company will initially seek to acquire high-performance, low-latency AI compute hardware and provide access under long-term lease agreements, meeting customer demand that spot markets and hyperscalers are unable to reliably service, according to the release. In March, Allbirds canceled its pending earnings call and announced it had entered into a definitive agreement with American Exchange Group that valued the company at $39 million. The brand management company that specializes in accessories is expected to sell products under the Allbirds brand. The result of the two pending moves, shareholders of the failing shoe company now own part of the company that believes it can help bridge the gap between AI GPU demand and available data centers. In an era of AI excitement, the pivot is being celebrated by the market, at least on first blush. Yes, they're celebrating out there. They're over there on Wall Street, cracking open bottles of champagne because a shoe company is going to be able to compete in AI infrastructure. A shoe company. This is the exact same shit that Long Island Iced Tea did, except it was with Bitcoin. And nobody was really sure exactly what they were doing with Bitcoin, but fuck it, they attached their name to it. Hell, at least these people actually have a stated plan, even though it's ridiculous. I'm sorry, I don't see it. I don't see this ever happening. I think somebody just pissed away $50 million on a bunch of probably golden parachutes that they are unaware are going to be deployed probably forthwith. These people do not know how to do this unless they've hired somebody from an AI GPU compute as a service infrastructure company to actually do this for them. They do not have the chops. They sell shoes. So the idiocy has never died. It's still with us. It's like I said yesterday, Jesus and the poor. The poor will always be with you, and so will stupid people. And here's another one of them. Elizabeth Warren is warning Elon Musk's X money. It threatens the stability of the financial system, she says. Oh, for God's sakes. Stephen Graves, writing out of Decrypt, says, Senator Elizabeth Warren raised fresh concerns Tuesday about the planned April launch of X Money in a letter to its owner, Elon Musk, which I'm sure he filed 13, that son of a bitch, right when he got it. In the letter to the billionaire entrepreneur, Warren flagged potential risks to consumers and financial stability, stating that, quote, if your track record operating X is any indication of how you'll operate X Money, consumers, our national security, and the stability of the financial system may be at risk. Pause. Are you fucking kidding me with this hubristic bullshit? Are you actually serious? Because there's a lot going on in this statement. If your track record operating X is any indication of how you'll operate X Money, consumers, our national security, and the stability of the financial system may be at risk. Miss Warren, might I suggest that you actually become more worried about your consumers, your national security, and the global financial system's health at large before you start poking X Money. And I'm not defending X Money. I think it was going to happen. Everybody knew it was going to happen. And it's not that I don't hate X money. I don't care. That's not the point. The point is our national security is that weak. The consumers are really that stupid that Elon Musk's X money is going to eviscerate them, right? The security and stability of the financial system at large is going to crater because Elon Musk launches X money. Honey, you're describing a problem with these situations, not a problem with X money. Let me continue. Warren noted that since acquiring Twitter and rebranding it as X, Musk has openly pursued building an everything app that would handle users' entire financial world. She cited his statements that X could become the biggest financial institution in the world and eliminate the need for traditional bank accounts. Quote, "Your failure to operate X in a safe and responsible manner does not breed confidence in your ability to safely expand into consumer finance," the senator wrote, highlighting issues with X, including the production of child sexual abuse material by the platform's AI chatbot Grok. Because, who will think of the children? X has already secured a slew of state money transmitter licenses for the payment platform through its subsidiary X Payments. Preview material indicate that the users can earn up to 6% APY on deposit accounts, which is significantly above the current federal funds rate range of 3.5 to 3.75%, the senator noted. Warren expressed particular concern about the potential of X Money partnering with Cross River Bank, which faced FDIC enforcement actions in both 2018 and 2023 for unsafe lending practices and unfair and deceptive practices. Her scrutiny of X Money arrives amid a transformed regulatory landscape. During Musk's tenure as senior advisor to President Trump, Warren noted the administration worked with acting CFPB Director Russ Vought to fundamentally restructure the Consumer Financial Protection Bureau, which is the federal agency that would normally police consumer financial products like X Money. The Trump administration has also enacted the Genius Act, legislation Warren argues has created a suspicious carve-out for private companies like X to issue stablecoins without the required approvals or guardrails that apply to public commercial companies. Launched in a very limited access beta in partnership with Visa last year, X Money is a cornerstone of Musk's ambition to transform X into an everything app with integrated financial services. Earlier this year, the platform added smart cash tags, enabling users to trade stocks and crypto directly from their timeline, according to the firm's head of product, Nikita Beer. At the time, Beer clarified that, quote, X is not handling trade execution nor acting as a brokerage, adding that the firm is, quote, just building the financial data tools and links. The question of whether X Money will feature crypto payments has sparked much debate, and they say the word Dogecoin, and that's where I stop reading because I don't fucking care about Dogecoin or shitcoins or Elon Musk. What I care about is that a prominent senator of the United States Senate, that's where senators are, actually thinks that the financial system might be at grave risk because of Elon Musk. National security is at grave risk because of one guy. Again, I'll say it. Honey, I think you've got much deeper problems to deal with than X Money at this point. Maybe you should go talk to the National Security Advisor about your concerns of the frailty of national security before you start poking people like Elon Musk. Like I said, I actually think the guy's kind of an asshole, but I can't argue. I also can't argue with success. So I have to remain neutral on the guy. I don't honestly think Elon Musk is here to destroy shit. I just don't see that in his personality profile. I could be wrong, and I don't care if I'm wrong or not. It's not the point. Again, I'm just saying it seems so over the top for a grown woman in a fucking suit that sits at the United States senatorial level to be talking about how consumers and national security and the financial system. She doesn't say the United States financial system. She says the financial system, which means India is at risk and Russia and China, and we're all going to die and burn in hell because of one guy. There's no room for the resilience of the human species heretofore. We've been alive on this ball of mud for hundreds of thousands of years in our present condition, like, upright walking primates. And we've weathered all manner of bullshit. But yet, no, this one is going to destroy national security, the financial system, and all the consumers. Because somebody who lied about her heritage said so. I can't tell what's worse, Allbirds or Pocahontas Warren. Moving to Pakistan. Pakistan is allowing banks to open accounts for licensed virtual asset service providers, or VASPs, which ends a ban that they instituted in 2018. This is actually much bigger news than I think a lot of people realize. And Brian Danga from The Block is going to tell us all about it. The State Bank of Pakistan has effectively lifted a 7-year ban on banking access for crypto firms, replacing a 2018 circular that barred regulated entities from dealing in virtual assets. The directive, issued with immediate effect, let's say that again, issued with immediate effect, the directive authorizes banks, microfinance banks, and payment system operators to open accounts for entities holding a valid license from the Pakistan Virtual Asset Regulatory Authority. SBP Director Said Mansoor Ali said that the directive replaces a circular issued April 2018, which prohibited processing, using, trading, holding, or transferring value in virtual currencies, including Bitcoin and Litecoin, a name I haven't heard in a while. Under the updated rules, banks may open accounts for entities holding a valid PVARA license or a, no objection certificate during the licensing process. The central bank requires regulated entities to obtain and independently verify licenses before onboarding, while maintaining enhanced customer due diligence under anti-money laundering, combating the financing of terrorism, and countering proliferation financing regulations. That's a mouthful. The circular instructs banks to establish segregated client money accounts denominated in Pakistani rupees for settlement of authorized VASP transactions, and these accounts must remain I can't pronounce it. Let's try it again. Renumerative, I was close. I almost had it. You know what I'm talking about. It can't prohibit cash deposits and withdrawals, and it cannot be used as collateral or security for financing. The rules further bar commingling of client funds with VASP operation balances and prohibit banks from investing, trading, or holding virtual assets using proprietary funds or customer deposits. Banks must also revise customer risk profiling models to account for VASP exposure and apply ongoing monitoring and suspicious transaction reporting to the Financial Monitoring Unit. The central bank's pivot follows the passage of the Virtual Asset Act of 2026 by Pakistan's parliament on March the 6th, which established PVARA as a statutory body. The act introduced criminal penalties for unlicensed operations, including fines of up to 50 PKR or 50 million PKR, about $179,000 US, and prison terms of up to 5 years. Well, the prison term and the fines I don't care about. What I do care about is that they reversed a 7-year-old ban, and it's effective immediately. Effective immediately. These guys can go get a license. Now, if they are actually get the license, they can apply for a license. They can do that today. Effective immediately, they can do that today. How many and who gets those licenses approved is a different story altogether, but everybody that has anything to do with this bullshit, they can apply today. After 7 years of you can't touch Bitcoin, all of a sudden it's, yeah, you absolutely can touch Bitcoin. And we'll even throw in Litecoin and the rest of the shit coins. You can do it all, man. You can do it all. And Pakistan, not a small country. Pakistan, not an unimportant country. India will probably be next. Just saying. Okay, on to BIP 361. Got to take a breath on this one. Bitcoiners propose freezing quantum vulnerable coins in BIP 361. This is out of Cointelegraph. Cypherpunk Jameson Lopp and 5 co-authors from the Bitcoin quantum security space have proposed freezing quantum vulnerable coins on the Bitcoin network, including Satoshi's $74 billion stash, to prevent them from being stolen once quantum computers become available. The move is the second part of a 3-stage proposal under BIP 361 called the, quote, post-quantum migration and legacy signature sunset, end quote, which was posted as a draft on GitHub yesterday, which would be Tuesday. It addresses major risk to Bitcoin, the potential use of quantum computers to steal roughly 1.7 million BTC locked in early P2PK addresses, including Satoshi's stash, none of which are quantum proof. In the wrong hands, these coins could significantly undermine the value of the network. Jameson Lopp told Cointelegraph on Wednesday that BIP 361 is not currently in a position to be adopted. Quote, rather, it's a rough sketch of one way we could approach the issue of a looming circulating supply shock if quantum computing advances to the point that a post-quantum signature scheme achieves consensus for being added to Bitcoin, end quote. He expects various aspects of BIP 361 to continue to evolve over the years as more research and development is conducted in the area. BIP 361 builds on top of BIP 360, which was released in February, which proposed a soft fork for a new output type called pay-to-Merkle root. It works similarly to Bitcoin's existing taproot addresses, but with quantum vulnerable key paths removed. While BIP 360 protects new coins going forward, it does not really address the roughly 34% of the Bitcoin supply that remains vulnerable unless it is transferred to brand new addresses. BIP 361 proposes that 3 years after activation, Phase A of the proposal would prevent any new BTC from being sent to old-style addresses, with all users on quantum-resistant address types. The second phase, Phase B, would be to invalidate old-style signatures and any Bitcoin still sitting in vulnerable addresses to become effectively frozen 5 years after activation. Phase C provides a potential rescue mechanism using zero-knowledge proofs, allowing people who missed the deadline but still have their seed phrase to recover frozen funds. Okay, so at least there's that. We'll come back to all that. The authors described it as a private incentive to upgrade because lost or frozen coins only make everyone else's coins worth slightly more, whereas quantum recovered coins make everyone else's worth less. Quote, this is not an offensive attack. Rather, it is defensive. Our thesis is that the Bitcoin ecosystem wishes to defend itself and its interests against those who would prefer to do nothing and allow a malicious actor to destroy both value and trust, end quote. Jesus, James. However, the proposal would render some existing UTXOs unspendable by their owners if they fail to upgrade, which some have seen as a significant philosophical departure from Bitcoin's ethos. Bitcoin protocol developer and researcher Mark Earnhardt, who shared BIP 361 on X on Tuesday, was met with community pushback and comments such as, quote, this quantum proposal is highly authoritarian and confiscatory. There is no good rationale for forcing the upgrade and rendering old spins invalid, end quote. Bitcoin Magazine editor Brian Trolls, otherwise known as Shinobi, rejected the proposal outright. TFTC founder Marty Bent called it laughable, and Phil Geiger, head of business development at Metaplanet, quipped, quote, we have to steal people's money, to prevent their money from being stolen, end quote. I'm going to try to contain myself now that we've reached the end of that article. There's no way that I would be able to compete in the open intellectually when it comes to Bitcoin with somebody like Jameson Lopp. There's just not. That's the first caveat I'm throwing out there. I would be beaten to a bloody pulp in public if I were to engage in a debate on any aspect of the technology behind Bitcoin with Mr. Lopp. I'm not even going to go there. But from a philosophical standpoint, how fucked in the head do you have to be to get behind something like this? It makes a lot of assumptions that you have no way of knowing is actually true. One assumption is that quantum computing is actually going to occur. At this point, we still don't know if it's possible. Not at the scales that people are talking about. Right now, it's a toy. It's a very expensive toy, but it is a toy nonetheless, and it still really can't factor anything other than 7 times 3. Or, well, 21, and factor it into 7 times 3 or 1 times 21 or however else you want to factor it. That's about all it's good for right now, and doesn't mean it won't get stronger. But will it be able to do the things that people think it's going to be able to do? We don't really know. That's assumption number one. The other assumption is that we've got to do this because if quantum computers get a hold of that 1.7 million Bitcoin stash that somehow or another is going to destroy the whole system. Well, I've seen people with large amounts of Bitcoin just flood the market in the open, and it really didn't destroy Bitcoin because 10 minutes from now, another block is going to be found. And people are going to have transactions in that block. This notion completely does almost, let's say it this way, almost completely does away with the safety that people feel of the man in the coma. And if you don't know what man in the coma is, it's simply, if I got Bitcoin today and I get hit by a bus, but I survive it, yet I'm in a coma and somehow or another, I don't wake up for another 80 years. That when I do wake up, I've got, like, let's say that my Bitcoin is on the very first style of addresses that there ever was. Even if quantum computing did not happen, right, then those coins would still be there. I'd still be able to spend to any other address, right? I mean, it would be compatible. But now, if I wake up out of an 80-year coma, things would be different with BIP 361. I would hopefully I would have my seed phrase, but I would have to actually go and recover my frozen funds from a seed phrase using some mechanism that I don't know what that mechanism is yet. I haven't read through the BIP, so I don't know. I hope that they've thoroughly described what that mechanism would be, but right now I have zero idea. The thing that I don't like the most about BIP 361, given this read and some of Jameson Lopp's statements, is that it seems a little fear-mongery. You should be terrified. You should be scared. And he is also positing that people want to do nothing. Where did he say it? Let's see. He says it somewhere up here. At least I thought he did. He said something about like those developers that would like to rather stay. Oh yeah, here we go. It says it right here. This is not an offensive attack. Rather, it is defensive. Our thesis is that the Bitcoin ecosystem wishes to defend itself. That's an assumption. We think it does. That would be a good bet. But anyway, and its interest against those who would prefer to do nothing and allow a malicious actor to destroy both value and trust. Who the fuck is doing nothing? There are all manner of quantum resistant proposals on the table from Bitcoin developers And yet here we go one more time from somebody like Jameson Lopp saying that nobody's doing nothing, or rather everybody's doing nothing, or nobody's doing something, whatever. It's this narrative that nobody is doing anything at all about this, and that's just not fucking true. And Jameson Lopp knows better. So from a technical standpoint, yeah, he'd wipe the floor with my ass. Yet this, from a philosophical standpoint, he doesn't have a leg to stand on. Because a lot of the assumptions that are here cannot either be proven or are technically false. The assumption that nobody's doing anything is false. That is a false statement. It is a false part of the thesis. People are doing stuff. BIP 361 is actual evidence itself that people are doing something. I think it's dumb, but I'm grateful that somebody's actually doing something, of which Jameson Lopp says nobody's doing anything. So the very existence of BIP 361 itself completely invalidates one major fucking argument that Jameson Lopp is making. Sorry, dude, you lose this round. Hey, Kidwarp Vanilla is in the Circle P. The Circle P is where I bring plebs with goods and services, and they're just like you. And they want to bring their goods and services to you, other plebs who want to buy those goods and services, but you will be buying it in Bitcoin, because if you're not selling it in Bitcoin, you're not in the Circle P. And Kidwarp's Vanilla Shop is definitely in the Circle P. You can get a big old fat can of BitPaste. What is BitPaste? Well, I got a little brief here from Kidwarp himself. He says, Kidwarp's Vanilla Shop is bringing quality homemade BitPaste from our kitchen to yours. We source premium quality organic Madagascar vanilla beans and vanilla beans from different countries from all over the world to show off the different flavors of vanilla beans. We use the old-time traditional vanilla extraction processes and not modern quick brew methods. No corners are cut in our small batch artisan production. Vanilla beans are chopped by hand and left to macerate in a minimum, or rather for a minimum of 2 months in choice alcoholic spirits before we blend them to perfection to make premium quality BitPaste, which is vanilla paste. Use BitPaste as a 1-to-1 replacement for vanilla extract in any recipe you so choose. Try some in your coffee or your tea. Use it in your favorite cookie recipe or ice cream recipe, or mix it up and try it in something savory. That's BitPaste, and it's in the Circle P here on the Bitcoin and podcast. Make damn sure that you tell them you heard about him here. Use the code Bitcoin and you will get 10% off of handmade vanilla bean paste by a Bitcoining pleb just like you. He's in the Circle P. You pay for it in sats, and you get 10% off using code Bitcoin and. The International Monetary Fund has dirtied their diapers yet one more time. The 100% debt trap. Why the IMF's latest warning is a massive long-term signal for Bitcoin. This is Omkar Godboll writing for CoinDesk. The International Monetary Fund's latest macroeconomic warnings paint a picture that could be one of the most consequential and bullish indicators for Bitcoin. At the core of the IMF warning is a steady rise in global public debt, which the IMF has projected could approach 100% of global gross domestic product, or GDP, by 2029 under current trends. It means that every dollar, won, pound, euro, yen, rupee, and any other currency earned in a year will be used to pay debt off. Wow. And they're specifically saying government debt. Pause and think about that. 100% debt to GDP for the world. There are some countries that have more than that. They have like 115% debt to GDP. But they're talking about every single country in the world on average going to 100%. the idiocy of what we've allowed the financial system to become on the globe is almost eye-watering, but I digress. In other words, by 2029, debt load will have grown to consume the entire global economic output, leaving nothing for additional investments in the economy or in non-economic but yet socially important causes. Per the IMF, China and the U.S. will continue to drive debt higher with contributions from a broad swath of nations as defense spending surges globally. If annual economic growth is equal to or falls short of the debt raised by issuing government bonds, markets could start questioning the fiscal solvency of sovereigns and thereby demand a higher return in the form of a bond yield for lending to those governments. Why would you continue to lend? At one point, they won't even be able to pay the interest, much less the principal. Dude, this is like loaning money to a crack addict. Whatever. This is precisely a scenario in which assets like Bitcoin could stand out. Decentralized, censorship resistant, and beholden to no government nor central bank, Bitcoin sits entirely outside the architecture of traditional finance. There is historical precedent for Bitcoin attracting a haven bid during periods of stress and TradFi, like 2013, following the Cyprus banking crisis. Authorities imposed losses on depositors as part of a bailout. And then Bitcoin rallied sharply in the months that followed, gaining significantly from pre-crisis levels. A similar dynamic cited more recently was the U.S. regional banking turmoil in early 2023, when stress across several lenders coincided with Bitcoin's recovery from around 25,000 and the start of a broader upward move. There is, however, the counterargument that rising bond yields would be bearish for BTC. Bonds pay a fixed yield, which means that every dollar in Bitcoin is a dollar not earning guaranteed returns from bonds. That gap is what experts call opportunity cost. It rises when bond yields rise, draining money from riskier assets such as stocks and Bitcoin. We saw this play out from late 2021 and through 2022 as Bitcoin crashed to roughly 16K from nearly 70,000. The sell-off was at least partly catalyzed by the Fed's rapid rate hikes to tame inflation, which lifted yields on treasury notes, and back then the digital gold narrative evaporated rapidly and BTC fell alongside all technology stocks. Note that the 2022 surge in yields was due to Fed hikes and not fiscal concerns questioning the government's solvency, but the IMF's latest warning changes that calculus. If global debt rises to 100% of GDP or more, bond markets worldwide could panic and price in concerns about solvency. And the resulting yield surge, therefore, may not drain money from other assets as it usually does. The impact could be the other way around. The investors parking money in alternative assets such as Bitcoin, the different ways governments typically respond when debt outpaces growth, outgoing debt, spending cuts, raising taxes, or allowing inflation to erode the real value of debt over time, all have damaging impacts on real or inflation-adjusted returns from fixed income investments. Bitcoin is structurally resilient to all of them, with its supply capped at 21 million and no central bank to debase or devalue it. The IMF warning doesn't necessarily imply an immediate moonshot for Bitcoin, but it does strengthen its long-term appeal and validates the growing institutional holding of the cryptocurrency itself. It indicates that the macro backdrop of structurally higher public debt, not just in the US, but worldwide, is impossible to ignore. Yeah, no shit. You know what's impossible? What else is impossible? This equation cannot be solved. This equation is unsolvable. The math doesn't work. Because they think about what they were saying with like bond yields going too high. Well, you know what happens when bond yields go high? The face value of the bond itself drops. Now, who was told by a bunch of banks in Europe and the United States and God knows elsewhere that they had to start holding a shit ton more United States Treasury bonds as their basic collateral for their bank? The one that reassures everyone that they've got enough money. Well, that face value dives. It goes down. And all of a sudden, you're going to see a whole shit ton of banks go completely insolvent at the same time that these quote unquote bonds get a really great interest rate. So people are going to just start buying bonds, right? No. Well, with what? If you've got a banking collapse that's systemic globally, you're going to have a little bit more problems than you think getting these high interest bonds in your hands. You're going to have other problems that attack you before that shit ever happens. So at this scale, nobody's ever seen this scale before. So here's the advice. You buy Bitcoin, you hold Bitcoin. You don't hold a derivative of Bitcoin. You don't hold a derivative of a derivative of Bitcoin. You actually buy the spot and put it into a hardware wallet that you control with private keys, and you don't spend it. Because what happens if all the governments find themselves in this pickle all at once and everything just starts burning down? You will at least have Bitcoin. Now, will it burn down even the global internet? It would definitely impact that, but there's ways around that. And people are just like the quantum resistant addresses, people are working on it, and people are brilliant, and people figure out things, and they solve problems. That's what people have always done since we fell out of the tree and hit our head on the rock and found a mushroom and started munching it and, having a day trip. Right? I don't worry about that because I see the whole of human history. It doesn't mean that I know everything that happened, but we're still here. And I know of at least several problems that we had to overcome to get here. And yet we still persist. And we solved a lot of problems along the way. And yet somehow or another, we have to contend with this group of naysayers saying, well, this is the problem that you can't solve. This quantum thing with Bitcoin you can't solve. One thing I know that one we can solve. One thing I know you can't solve is the fact that our apathy has allowed global governments to run amok for so long that they will get to a point where they can't even pay the interest on the bonds that they're printing. It's sad. Those are the numbers. Let's run some more numbers. CNBC futures and commodities, energy all in the green today after stabilizing since Sunday at 3 o'clock p.m. my time, which is Pacific Daylight Time. I've seen nothing but a general bleed from a massive spike in oil prices, and it seems to have kind of bottomed out a little bit. Right now, Brent North Sea is trading at 70 or 0.7% to the upside, 95.53 a barrel. May oil for West Texas Intermediate up 0.89% to 92.09. Natural gas up 0.15. Gasoline itself is up 1.25 to $3.07 per gallon, and Merbon crude is up 0.7 to 101.59. Metals are mixed. Palladium is down a half point. Gold is down over a half point to 48.17 and 2 dimes. Platinum is up 1.5. Silver is down 0.13 to 79.43 an ounce, and copper is up 0.07%. Most of agriculture is in the green today, except for chocolate, losing some of its yesterday's gains of 8%. It is now down 2%. Biggest winner today, who is that? Rough rice, 1.5% to the upside. Live cattle trading down, but sideways, essentially. Lean hogs up 0.25. Feeder cattle down 0.86%. S&P is up a half point. NASDAQ is up 0.8%. The Dow is down a third, as is the S&P Mini. And then we got Bitcoin chilling out at $74,100. That's after it hit damn near $76,000 last night or early this morning. I can't remember when, but it's still a $1.48 trillion market cap. We can purchase 15.5 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,016,073.03 of. Average fees per block are normal, and we have about 32 blocks carrying 43,000 unconfirmed transactions waiting to clear at high priority of 3 sats per VByte. Low priority is going to get you in at 0.6. 986 exahashes per second is the hash rate for the Bitcoin network. Not a lot of change here, man. It seems like miners are doing just fine protecting the network. Now, from Crypto Washing Machine, yesterday's episode of Bitcoin, and I got William the French. 10,000 sats. Thank you, Bill. He says, some sats and thanks for your energy. I appreciate that. And Permanerd with 1042 says, listen to this episode and then buy some maple syrup from Maple Trade for sats. Yeah, go get your maple syrup. He doesn't have a lot. Maple Trade, he sells it. He'll probably sell out here in a couple of weeks. So go to, look for on X and on Nostr at Maple Trade. Just go look. If you can't find them, message me on X or Nostr or whatever. All my shit's down in the show notes. You can find me somewhere, and I'll try to get a hold of Maple Trade for you. Permanerd with another 210 says, came for the Bitcoin, stayed for the FOSS. There are so many Linux distros that I believe anyone can find one for them. You can find tiny ones that will run on super old hardware. Let's see. Like Tiny and Puppy, I guess those are names. I've never heard of those before. Others like Linux Mint come loaded with office suites and other useful, and then his message cuts off. Sorry, Permanerd. Call up Fountain and tell him to stop truncating the boost. This is ridiculous. Kaz Peelan with 210 says, love to know why not Monero. Because Bitcoin, that's why. And Nick Dose with 191 says, cheers. And cheers right back at you. Nostr Gang with 101 sats says TY, which means thank you, sir. And Pyro Hawk with 100 says FOSS for the win. You damn Skippy. That's the weather report. Welcome to part 2 of the news that you can use, where I apologize a little bit over here for my my rough treatment of. Wait a minute, what? Hold on. Get back here to my boosts. Okay, Kaz Peelan said, love to know why not Monero. I didn't mean to be dismissive about it, Kaz. It's just I don't need it, and I'm not saying you don't. Hey, if you think you need Monero, be my guest. I've seen worse. Let me say that. Zcash and Monero are the only other things aside from Bitcoin that I would even entertain, yet I know I own zero of either one of them because I myself do not think that these are good things to have. Now, that I don't want to talk about technically why, because that's my business and nobody else's. And I'm also not going to say why you shouldn't. I'm just saying this is why, for me, this is why not Monero. All right, didn't mean to be dismissive. You deserve more respect than that, Kaz. I'm just saying. All right, let's get back to the news. Back-to-back billion-dollar days. Strategy's STRC ATM clears $2.7 billion in 48 hours. All right, this came out after yesterday's show, which I told you about him buying $1 billion in Bitcoin over the actually Monday show, right? Well, it appears that a whole bunch of people has bought a whole bunch of STRC. Let's get the story out of Nick Ward, Bitcoin Magazine. Strategy's STRC ATM has produced $2.7 billion in volume across just 2 trading sessions this week, more than all of last week combined, absorbing an estimated 29,900 Bitcoin with every single share trading above par. Yesterday, I wrote about how Strategy's STRC ATM had just printed its first $1 billion volume day. Today, it did it again, but even bigger. Tuesday, April the 14th, closed with an estimated $1.57 billion in STRC volume. That's 100% of it above the $100 par threshold, implying roughly 16,762 BTC was absorbed in a single session. That's 37 times the daily mined Bitcoin supply, more than a month of global issuance pulled off the market in one single trading day. Combined with Monday's $1.17 billion, this week has produced $2.74 billion in STRC volume through just 2 sessions, an estimate of 29,914 Bitcoin acquired via the ATM. For context, last week's total, confirmed via Strategy's most recent AK filing, was 13,927 Bitcoin across 5 full trading days. This week has more than doubled that, but it did it within 48 hours, 115% above, with 3 sessions left for the week. Maybe that's because today was the last day that you could take part of the dividend structure of STRC. What do I mean? Okay, I was asking this question on Nostr earlier today. You had to have shares of STRC by April 15th to be able to get this month's dividend, right? Or the quarter's dividend or something like that. I can't remember exactly how it's structured because I don't own any. But you had to be an owner of record as of the end of business today to be able to get money out of STRC whenever it is that they do their dividend, which I think is at the end of the month. And I don't know if it's on a month-by-month basis or a quarter-over-quarter basis. But this may explain why so many people bought a shit ton of STRC. We'll know starting tomorrow and Friday, right? Whether or not this was more people trying to buy as much STRC as they could get so they could literally say they were owner of record by the end of business April 15th, 2026 in order to receive the dividend or not. If they continue buying tomorrow and Friday, that would be a good estimate that they did not buy it just to be owner of record by today. If volume falls off a freaking cliff on tomorrow and Friday's trading sessions, then yeah, that's why so much was sold. But it doesn't matter. That's a lot of stretch. That's a lot of stretch. And if Saylor actually does what he says he's going to do, he's going to use that money to buy Bitcoin. So if he doesn't buy 30,000 some odd Bitcoin announced on this coming Sunday, well, he'll announce that, he should announce on Sunday that he's going to buy Bitcoin. And then the 8K filing will drop Monday morning. And if he didn't buy 29,000 Bitcoin, then something's amiss, because that's what he said that all the funds for Stretch ATM are doing is to buy Bitcoin. And if he doesn't buy $2.7 billion worth of Bitcoin, then I will have questions. But before I even get to ask those questions, there's a new class of crypto treasury companies forming around Strategy's high yield stock. So we will continue on with the whole at the market thing. Omkar Godbowl writing out of CoinDesk. A brand new class of crypto treasury companies emerges around Strategy's high yield stock, STRC, which we were just talking about, drawing in firms looking to capture both exposure to Bitcoin as well as additional income. Stretch is a security issued by Strategy. The company raises capital by offering investors annualized dividends of 11.5%, paid monthly in cash. So it's not quarterly. The dividend comes monthly. And the proceeds are primarily used to purchase Bitcoin. As trading volumes surge, a growing number of companies and decentralized finance protocols are accumulating STRC to capture its yield while gaining indirect exposure to Bitcoin. Stretch is now being used as a base layer for new financial products that add leverage, tokenization, and structured yield. Saturn Credit, a Bitcoin-backed yield platform, accumulated $15 million in Stretch within 6 days of launch. Apix, an on-chain credit protocol, has built a position of 800,000 shares after purchasing an additional 200,000 STRC, with plans to become one of the largest holders of that security. BitStrategy is taking a similar approach. Co-founder and head of US, Ryan McGinnis, said the firm aims to accumulate strategy securities with the long-term goal of becoming the world's largest strategy shareholder. Oh God, it hurts. It hurts. On-chain, nearly $200 million in tokenized STRC now exists on Ethereum, with close to $100 million trading on Pendle. Pendle itself is a decentralized finance platform that allows users to trade and separate yield from underlying assets, creating markets for future income streams. During Wednesday's pre-market trading, STRC dropped to $99.39, falling below its $100 par value. This happened after the stock went ex-dividend, which means new buyers are no longer eligible to receive the upcoming dividend payment. That's what I was talking about. You got to be owner of record by end of holding today or end of market today to be able to do this. But this is saying that ex-dividend has already happened, so maybe it was yesterday, the 14th. This is all too confusing. Just buy Bitcoin and hold the Bitcoin and be happy with yourself because you can rest easy at night. But the whole notion that companies are being built upon a derivative issued by another company built on top of their exposure to Bitcoin is problematic at best and a goddamn casino at worst. I'm sorry, guys. I didn't mean to use the GD word, but between a shoe factory getting into AI and whole companies structuring their company, their reason for being is to own as much of this one stock from this one company who has direct exposure to Bitcoin is silly. It doesn't even make sense. Why build a company? This is why I love the Circle P. I don't give advertisement to people who don't have an actual fucking product. Make something. Pour liquid things into molds and make soap or candles, or blend up walnuts and pecans and make hodl butter. Chop up vanilla bean. Do something that actually makes something that you can put into something else and then sell to somebody. We're going to build a company around Stretch. God, what a boring existence. I'd like to go into work every day for that. To do what? Oh my God. And then we've got the Trump-backed WLFI. They're moving to unlock 62 billion tokens after the $75 million loan controversy. Oh, joy, Sharamallah Coindesk. Yay, yay. The Trump family-backed World Liberty Financial has proposed unlocking 62.3 billion WLFI governance tokens on Tuesday, less than a week after CoinDesk reported the venture had used 5 billion of its own tokens as collateral on lending platform Dolomite to borrow 75 million USD in stablecoin. WLFI's token was originally sold as a governance-only token with no transferability and indefinite locks. A vesting schedule with a defined path to liquidity changes the economic profile of what holders bought. The proposal would open up liquidity for insiders who previously had no exit, changing the economics of the token. It's right there. It's right there. It's a governance token that was supposed to have nothing but voting value. And now all of a sudden they're going to say, well, we're changing the rules. The proposal splits the locked supply into two groups. Early supporters holding 17 billion WLFI would receive a 2-year cliff followed by a 2-year linear vesting period, retaining all tokens. Founders, team members, advisors, and partners which hold 45.2 billion WLFI would face a 2-year cliff and a 3-year vest, but with 10% of their allocation, roughly 4.5 billion tokens, burned immediately on passage. And that refers to the permanent removal of tokens from supply usually by sending it to an address that is not controlled by, anyone that we know of. We need to be careful with that. In practice, it means insiders would surrender 4.5 billion tokens in exchange for beginning to unlock 40.7 billion tokens that were previously locked indefinitely with no vesting schedule attached. Those tokens had no path to liquidity before this proposal. So they're, again, changing the rules. WLFI included participation data from its 6 prior votes in the Wednesday Post, showing that even the most engaged proposal, the vote to make the token tradable, drew 11.1 billion WLFI in voting power. The quorum for this proposal is 1 billion, with a simple majority required to pass. At those thresholds, the proposal could pass with a fraction of the founders and team allocation alone. Holders who do not affirmatively accept the new vesting terms keep their tokens locked indefinitely and retain governance voting rights. The timing comes on the back of events of the past week. And that was that whole depositing $5 billion of its own governance tokens to Dolomite and borrowing $75 million in stablecoin. And I already reported on all that. You can go back to last week's show and find the WLFI story and listen to that show, and you'll learn all about it. Changing the rules, turning a governance token and giving it into something something it was not supposed to be, and giving it liquidity so that you can trade it and get, a stablecoin for it, or sell it for dollars, or trade it for Bitcoin, or whatever. None of I'm tongue-tied. If you wanted to give Elizabeth Warren a little bit of accelerant to throw on a bonfire and make it burn a little hotter, then, baby, you just gave her a barrel of unleaded gasoline and a fucking jackknife. This is exactly what somebody like Elizabeth Warren is waiting for. And she will scream impropriety, and she's going to get even more people to listen. Because honestly, this is a little bit of impropriety. This is a conflict of interest. I've gone through all that, and I'm calling balls and strikes here. I don't give a shit who wins this fucking game. I don't care. This is a strike. This is like strike 2. I've just called strike 2. You missed the ball. And why did you miss the ball? Because you changed the rules on something that you can print literally out of thin air. It's just, Elizabeth Warren is going to put on a headdress, and she's going to get a little drum, and she's going to beat the shit out of it while doing a little rain dance, and it may actually work. Why on earth would you even consider doing this? This guy's got 2.5 years left. You don't think they're going to come after him for this? Just by itself, this alone is enough for Elizabeth Warren to be able to get ahead of steam and start being able to say the word impeachment and not be deemed incredible. And I mean incredible insofar as not having credibility for it. This is not what you do. I'm pretty sure the midterms for the Republicans is fucking toast. I can't believe you want the Democrats to win. That's not what I said. I'm calling balls and strikes. I'm not saying what I want. I'm saying what is. And after Iran, gas prices, demand destruction in the oil industry because price got so high, and nobody could actually get physical oil even if they did have the money to pay for it, that it caused demand destruction. Shit, the Financial Times was writing about that shit yesterday. We've got less demand for oil today than we did last week because of this mess, which doesn't help. The midterms are gone. I guess maybe that's why they waited. Maybe that's why they're doing it now, because fuck it. Hey, we already lost. We can't do anything worse. And there's no way they're going to win the midterms, and I think they all know it. So they might as well just party it up. Hey, fuck it. Take 60 billion WLFI governance tokens and let's just make them tradable. This is not a good look. The optics are piss poor at best. But enough about all that. Google's Gemma already acts like Gemini. Someone made it think like Claude Opus as well. Jose Antonio Lons from decrypt.co going to take us out for the show today. If you've been following the local AI scene, you probably know Opus, the open source model that tried to distill Claude Opus 4.6's reasoning into Alibaba's Quinn so you could run something resembling Opus on your own hardware for free. It worked surprisingly well. The obvious catch, Quinn is a Chinese model and not everyone was comfortable with that. Well, Jack Wrong, the same pseudonymous developer behind that project, heard the feedback. And his answer is Gemopus, a new family of Claude Opus-style fine-tunes built entirely on Google's open source Gemma 4. All-American DNA, same idea, frontier-level reasoning, running locally on hardware that you already own. The family comes in two flavors. Gemopus 426B A4B is the heavier option. A mixture of experts, a mixture of experts model that has 26 billion total parameters, but only activates around 4 billion during inference, which means it punches well above its weight on constrained hardware. Hold on for a second. I got some kind of stupid alarm going off here. Parameters are what determine an AI's capacity to learn, reason, and store information. Having 26 billion total parameters gives the model a huge breadth of knowledge. But by only waking up, and that's in quotes, the 4 billion parameters relevant to your specific prompt, it delivers the high-quality results of a massive AI while remaining lightweight enough to run smoothly on everyday hardware. The other is Gemopus 4E4B, a 4 billion parameter edge model engineered to run comfortably on modern iPhones or a thin and light MacBook with no GPU required. The base model choice matters here. Google's Gemma 4, released April the 2nd, is built directly from the same research and technology as Gemini 3. The company said so explicitly at launch. That means Gemopus carries something that no Quinn-based fine-tune can claim. The DNA of Google's own state-of-the-art closed model under the hood, wrapped in Anthropic's thinking style on top. It's the best of both worlds, more or less. What makes Gemopus different from the wave of other Gemma fine-tunes flooding Hugging Face right now is the philosophy behind it. Jack Wrong deliberately chose not to force Claude's chain of thought reasoning traces into Gemma's weights, a shortcut most competing releases take. His argument, backed by recent research, is that stuffing a student model with a teacher's surface-level reasoning text doesn't actually transfer real reasoning ability. It teaches imitation, not logic. Quote, "There is no need for excessive imagination or superstitious replication of the Claude-style chain of thought," the model card reads. Instead, he focused on answer quality, structural clarity, and conversational naturalness, fixing Gemma's stiff Wikipedia tone and its tendency to lecture you about things you didn't ask. AI infrastructure engineer Kyle Hessling ran independent benchmarks and published the results directly on the model card. His verdict on the 26 billion variant was pretty favorable. Quote, "Happy to have benched this pretty hard, and it is an excellent fine-tune of an already exceptional model. It rocks at one-shot requests over long contexts and runs incredibly fast to the MOE, or mixture of experts architecture," end quote. The smaller E4B variant passed all 14 core competence tests: instruction following, coding, math, multi-step reasoning, translation, safety, caching, and cleared all 12 long context tests at 30K and 60K tokens. On needle and haystack retrieval, it passed 13 out of 13 probes including a stretch test at 1 million tokens with Yarn 8x rope scaling. And I don't know what that means. It's punching above my weight here, y'all. Both models are available in GGUF format, which means you can drop them straight into LM Studio or llama.cpp without configuration. The full training code and a step-by-step fine-tuning guide are on Jackson's GitHub. Same pipeline he used for Cool Opus, same Unsloth and LoRa setup, and reproducible on Colab. Gemma Opus does have some problems. Tool calling remains broken across the entire Gemma 4 series in llama.cpp and LM Studio. There's some call failures, some format mismatches. Yeah, I get it, dude. It's got its problems. But here's why I bring this story to you for a couple of reasons. The first one is compaction. We have been told up until now that these things are just kind of unavailable to run on your own computer, on your own hardware. There's been some people that say, well, one of these days, maybe we'll be able to do it, have a really competent AI on something much smaller that a consumer can run. And I've been one of the people that have been saying that, but this dude is moving really, really fast with being able to make that make sense. And now that's why I'm bringing it to you, because this is the way that this is moving. You're going to see giant models able to run on an iPhone because humans have this tendency to take a problem. In this case, it's too big to run on an iPhone or a mini Mac or a Windows computer, and solve that problem by coming up with a really neat solution. Hey, it's 26 billion parameters, but we don't need to use all of them. We can just use 4 billion of them. And if he asks a different question, there's a different 4 billion that get woken up. It's kind of brilliant. It's kind of brilliant. You get to use only the pieces of the 26 billion parameter model that you need. And therefore, you can run it on something much smaller. That's why AI is coming home. It really is. It's coming to my home. It's going to come to your home. And at one point or another, very quickly, probably in the same breath, it's going to be coming phone. It will be on your phone. The fact that Apple, and I won't say the name because I've got my iPhone right here, and if I say her name, she'll wake up and start asking me questions. The fact is, I cannot believe that Apple has missed this boat entirely. The assistant that's on my phone should already have been in some way, shape, form, fashion, or another, either cloud connected to an AI or given some kind of back end to function on my phone as a very, very small and competent AI. But no, I've got the same iPhone assistant on my phone that gets shit wrong, won't tell me stuff because I'm driving. Hey, tell me about this Wikipedia entry for X, Y, and Z. I can't do that while you're driving. What my ears? Okay, whatever. But all this is coming to your phone. It'll end up being on your Fitbit. It'll end up being on your watch. It'll be the Internet of AI. Like we have the Internet of Things. Well, get ready for the Internet of AI, because even your barometric pressure gauge that you keep outside is going to be connected to AI through Wi-Fi and be able to operate a $1 billion model right there to project what the hell the barometric pressure is going to do, given what it's seen over the last 5 days. This shit's going to be everywhere. And it's all going to be connected together. And it's going to be one giant soup bowl of data, which makes me want to move to a cabin in the woods so bad I can't even express myself correctly. And it's not because I'm scared or I want to run away. It's that, dude, do you really want to deal with this? Do you really, really want this? And it's also not because I'm scared that everybody's going to know what I'm doing or what my preferences on dog food was because my phone's listening. I don't, honestly, it's not that I don't care. I do care, but I don't lose sleep over it. But that's not also why I want a cabin in the woods. It's really bad people exist in the world. And having this amount of data floating around, just being able to be plucked out of the air, there's not going to be security on anybody's data. I mean, it's all going to be like used and reused and reformatted and used in different contexts, and even, it could get to the point where even your home weather station is somehow or another going to come back to haunt your ass in 15 days from now for some reason I can't identify right now because of data. There's too much data. There's been at least 2 science fiction books that I've written about, or that I've read, that have been written by other authors, that suggest that there was a and it's just science fiction. It's pure fiction. It's not, whatever, but there's at least 2 of them that talk about a neurological disorder. And they both come from ingesting too much data. And it's a bad neurological disorder. It's not like a facial tic. It's like not being able to function as an adult human. It's like pissing yourself and shitting yourself. That kind of neurological disorder, the bad kind, the really, really bad kind. And if you think, well, it's just fiction. Yeah, so was Star Trek. How many things was in actual Star Trek that exist today? Because the writers of Star Trek, including Gene Roddenberry himself, were thinking about little data cards that held a lot of information on them, and you could just plug them into a computer and voila, there's all that data on the card. We have that. They're called hard drives, whether they're removable or not, I don't care. We also have these little tiny chips that we can put into cameras and take 6,000 4K pictures. The reason those exist in reality is because fiction writers like Gene Roddenberry and his other group of writers, when they were doing Star Trek, were imagining it. And if people like William Gibson can imagine a neurological disorder based on too much data, I am going to go ahead and say, you know what? I'm not going to discount that. It would not surprise me in the least if we aren't already seeing the development of a very serious neurological disorder in people ingesting too much data for too many hours of too many days of too many weeks of too many years. That's why I want a cabin in the woods. And if I ever get one, I may not see you on the other side, but until then, I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.